All right, we are live. It's the mortgage firm, Wellington Lake Worth, and it is Wednesday at noon. So we're here, open forum to answer any of your mortgage related questions. And as always, we've got 50 plus years of mortgage experience right here with Tom Bennick and Elizabeth Lopez. Elizabeth out of the banking industry for the last several years, and Tom out of the banking mortgage industry for the last several decades. So between the three of us, we got a couple years of mortgage experience.
Ouch.
I know, right? He makes it sound years and years.
And decades.
Old.
You have too much experience, So today we're gonna again, it's an open forum. We really want to just do questions and answers with anybody that pops in. We want everybody to know that on Wednesday at noon, come in, throw out any questions. Then we go ahead and we cover our topics. But the topic I want to cover today was, we make this industry difficult. And as you get into the minutia of it, yeah, there's a lot going on. But the basics of it are pretty simple. So, at least with realtors, I always say to realtors, don't overwhelm your customer. You just need to know the basics so you have a legitimate idea of the process. But let us dig in to the details. All right. You can be a friend of them. You be impressed with them. We'll go ahead and we'll figure out all the little stuff and what needs to be done. So what we're going to touch on today is just an acronym that I've always used, and it's just the acronym ICE, I-C-E, income, credit, and equity. And that is our whole profession in a nutshell.
Yeah, it's all a matter of income, money coming in versus liabilities, money going out. So that's where we're going to kind of go over today.
All right. And I've said as far as the mortgage stuff goes, it's a little bit like when we were young, and just in this business, you were kind of afraid. You were afraid of the customer. You're afraid of losing them. You're afraid of, insulting them or offending them, or you didn't ask the questions you always needed to ask. So when things would arise, you didn't have the answers. You didn't have your plan B. So the difference between getting somebody who's experienced and who's confident in what they do is they're going to go ahead and they ask the questions up front. I compare, and I know Tom has compared sometimes like going to the doctor. I go to the doctor sometimes when I'm younger and it's all hello, a couple questions, you're in, you're out. They really haven't checked anything. As you get a little bit older, it gets a little bit ugly and a little uncomfortable. But you know what? That doctor, he's looking at everything. He's finding out the stuff, that needs to be found out, and he's trying to plan for the best outcome for you. So we're not going to say we're like the doctors, but there is some comparisons in there.
I love how you say this. I think I stick to the attorney one because you're like, it gets uncomfortable with the doctor. I'm like, no, I do the comparison with an attorney. I'm like, I need to know everything, and then we need to present it to the judge. So you just take it off to a whole other.
All right, what about you, Tom? Do you have a different profession you like to compare it to?
No, I typically like to compare it to the profession that the borrower is in. Maybe what the borrower does for a living.
Mm-hmm.
Just to kind of relate it. I don't know, if you're baking bread every day, I'm sure there's a routine and a process you've got to follow, in order to get the bread out. So I got to do the same thing. I got to follow the process in order to get you closed.
There you go. All right. Probably a lot more politically correct and less uncomfortable doing that way too.
Especially if we're being recorded for quality assurance. So I'm leaving it that.
All right. Now, income, we don't run into a lot of this anymore, but if you're 40 hours a week, hourly pay, or you're a regular salary, you've had your job for 2 years, that's just pretty straightforward income. It's do you show your income? You have to show your income. If you show your income, it's not that difficult. Now, we're just not running into a whole lot of that now. But if you have other stuff like overtime and bonus and commission and maybe a little part-time, some time off, or if you're self-employed, we need to see a history. All right. A 2-year history is nice. It's not always necessary, but it's nice. So we need to show that, your income or any of this stuff, you've had it in the past, and it looks like you're going to have it in the future. So the fact that you just got a bonus this year, we can't add that as your income. Now, if your boss says it's a guaranteed bonus and you're guaranteed to get it every year and they're going to put it in writing, sometimes we can use that. Everybody thinks that it's a guaranteed bonus until it comes time for the boss to put it in writing, and then you find out that your bonuses aren't necessarily guaranteed. So self-employed stuff, a lot of it, we deal with a lot of self-employed individuals, and we get it. We get it. So a lot of times you can have a successful business, but by the time it gets onto your tax returns, it's not all there. So we have some formulas that we just plug it right into the Fannie Mae and the Freddie Mac sheets, and it spits out the income. We have a little bit of ability to explain some stuff. If you have one-time losses or you have a little something here or there, we can go ahead and sometimes remove a few things. But for the most part, we're putting it in those sheets, and that's what we're getting for the income. Okay.
And just one comment with the self-employment, like we've had people that they file their self-employment tax returns, but then they also pay themselves a check, so they're also W-2. So just wanted to I guess like I recently had somebody that all of a sudden their pay went from like $1,000 a week to $2,000 a week. In their business, it doesn't work that way. So just know that even though we do say that the W-2 will kind of confirm like what you're making, when you have a self-employment and you have a W-2 within yourself, within your own business, we do calculate that. We see that very different than if you're just strictly W-2 self-employed versus self-employed.
Yeah. And we'll get people, you can pay yourself $200,000 a year W-2, and they're like, here's my W-2. We still need to see the tax returns in that K-1 because, you could have paid yourself $200,000 and you took a $200,000 loss. Mm-hmm. So, there's, when you're looking at self-employed and you're an owner of the company, we need to see the tax returns.
So another thing I wanted to just point out on the W-2, if you're going from a W-2 job, like let's say, and we've had this, that you switch jobs, like while you're in the process of being pre-approved and you're looking for a house and you just happen to have a better opportunity with work, as long as you're going from a W-2 to another W-2, we can take an offer letter showing, your start date, if you're going to be full-time, whatever your rate is going to be of pay. But when you go from W-2 to self-employment, that you want to be careful with, because if you go from W-2 to self-employment, then the clock starts ticking because we need a 2-year history of self-employment at that point. So before you change jobs or do anything, that you want to start your own business, just make sure you run it by us so we could give you just information on what we need depending on what your next move is.
Yeah, and I'd like to elaborate only because I came across it. I'm coming across it with a customer that I helped several years ago. She's in the makeup industry, and she was employed by a well-known, makeup distributor. And now she recently became self-employed, and yet she showed me her tax returns. And of course, she still had W-2 earnings on there. But I told her I can't use that anymore because you're no longer at that employment. And it was a pretty good chunk of money that she thought she would be able to use because she made it last year, but she's no longer employed there. So as Elizabeth said, once you become self-employed, your income is calculated substantially differently.
Yeah. We seem to be running into that where, you'll be W-2, maybe making $25 an hour. And then your boss is like, hey, how about if you just go self-employed and I'll pay you $35 an hour? Sounds like a good deal, but now you're responsible for, all your own taxes, expenses, things like that. So people jump on that thinking they're making more money, but until we see that tax return and see what your actual expenses are, it's difficult to count that. Now, I will say though, is when you go 1099 from the existing job or the job that you had before doing basically the same function, we can often do that with just 1 year of tax returns, as long as we're showing that your income is relatively stable. Now, retirement income, I tell you, for retirement, basically you have Social Security, you have pension. If you're not, if you're not being taxed on your Social Security income, sometimes we can give you a little bit more. So we call it grossing it up, depending on whether it's an FHA, VA, or conventional type loan. So we can give you a little bit more income. Now, if you're 59 and a half and you have 401s or IRAs, we can go ahead and we can have you start taking distributions on those, and we can start counting that as income. So it's really I'd say it's I won't say magical thing, but it just opens up opportunities for creating additional income for you if you're retired, if you have those retirement funds and you're 59 and a half.
Credit. Let's let the banker, the branch manager, the banker explain credit.
Oh, you want me to explain credit? Okay.
Yes.
So credit is it's funny because I think that we get a lot of questions regarding credit. I don't think any of us have 100% mastered credit with the years and years and years that Mike mentioned that we have. Because credit, I think that it's everybody's different. The best way that I could explain it is that's your report card pretty much on what your history has been, your payment history, if you've been late, if you've everybody has different trade lines, whatever. So you always want to make sure that, and trade lines is pretty much just every account that you've opened that has been reported to credit. There's you want to make sure that they're open for a certain amount of time. And if you're starting credit, if you've been an authorized user, if you started with a secured credit card, those are trade lines that you're starting. So your report card starts marking with, they've been paying on time. They're not going over 25. I know it's a lot of people say 30. I usually say 25% of their availability or their credit availability, because that just goes to show you're responsible for these open trade lines that you have. You want to make sure you're never late, because we're seeing that you're going to be late on a credit card payment or any other loan. It kind of makes it hard on our end, because are you going to be late on your mortgage payment as well? So again, sort of like a report card that's reflecting the history that you've had. And just make sure that I like using Credit Karma, just to kind of know, is it exactly what your credit is? No, but just know that if you have any incidents on there, any credit incidents, whether it's collections that aren't yours, maybe there's a credit line that you have no idea what it is. You always want to keep an eye on it. I really like Credit Karma because they give you alerts all the time. I mean, I know the banks offer Credit Wise. What's the other one? Credit Genie. There's so many out there now that you could actually use, just to keep an eye on it. But you always want to make sure you do, because I mean, anybody could pretty much look up anything these days. So you want to make sure you have it. But at the end of the day, just make sure that you're doing everything possible to keep that report card, clean, especially paying on time and not going over credit limits.
And if you're looking to make a purchasing decision, or of course looking to get pre-approved, contact us. We could do what's called a soft credit report. We can put your credit report without putting any trade or any inquiries on there, and or putting hitting your score at all, and yeah, we can get a good idea on what your credit looks like.
Yeah. Also, with credit, just make sure that when we're in the process, you are not going out and getting a brand new car, and you're not touching your credit at all. So no furniture, no car, no nothing. Don't let anybody pull your credit. I of course, like if you have like another bank or somebody that that pulls it because they were originally going to do their mortgage or something like that, then yes, there's an explanation behind that. But what we're saying is no new credit that's going to result in us having to decline your loan because now we have additional liabilities we have to add, to the current credit that we originally looked at.
Yeah, furniture, layaway, don't pay for a year. It still shows up. We have to count it. Building credit, get to us early. We can help you build credit.
Mm-hmm.
We send everybody. I don't want to just be plugging Regions Bank, but I have yet to find somebody who has better credit building programs than them. Secure installment loans, secure credit cards, and we send them over to Adele in Boynton, Adeline up in Lake Worth,
Beverly, Tracy in West Palm.
Who's that in West Palm?
Beverly or Tracy.
Yep.
We know a lot of people. We obviously all came from Regions Bank, so we have a lot of connections with it. And you're right, none of us are affiliated with them, but they do have great credit programs.
Carolyn down in Boca. So, but yeah, they have just a secure installment loan, secure credit card. 3-4 months, you can be in pretty good shape. So, talk to us before you start doing stuff. I run into people all the time that are like, Mike, I kind of wanted to fix my credit first. I didn't want to call you. I didn't want you to see it. I wanted you to see better credit. Well, they might have closed out an old credit card that was a bad credit card, or they think is a bad credit card, but it was their oldest credit history. So now they've closed out old credit history. They started paying off collections that haven't reported in months or years, and now they're new collections. So let us take a look at the stuff. Let's figure out what the best use of your money is and try and put you on some path. All right.
And just as another word of caution, please don't start disputing a bunch of trade lines without speaking with us. That really makes matters worse for once you start disputing trade lines. So once you if you look at your credit report, you have any questions, give us a call. We'll at least let you know what it means, but don't start calling and disputing things. It doesn't help at all.
And then just one more thing also regarding credit. I have had clients in the past that they tell me, I want to pay off all my credit cards before I go to you and apply for a mortgage. Well, it doesn't work like that. So when we look at credit, we look at what the minimum payment. So if you have a credit card that's got a $5,000 balance on it, but your monthly payments are only $30 on it, that's what we're looking at, is that $30 monthly payment. So while you're trying to pay $5,000 towards this credit card, that's $5,000 that could have gone towards your down payment, or, I don't know, reserves or whatever it is that we're asking for. But just know that paying everything all off, and sometimes paying everything down to zero, can hurt your credit. So just again, let us take a peek at it before you make any decisions happen.
Yeah, we'll run an analyzer sometimes, and it says charge $20 on this credit card.
Yeah.
So you'll have a zero balance. Also, a cautionary thing, we run into this a lot, is when you're in there and you're at a store that maybe you don't use a lot, and they say, hey, get 20% off if you open up a credit card, and no annual fee for 2 years. So you go ahead and you open the credit card, you save your $20. Well, you don't use the card. You pay it off right there, and then you don't use it again. Well, 2 years later, you get hit with your $25 annual fee. You're not used to paying on that credit card, and you don't know about that annual fee until you end up with a late payment on it. So that late payment now hits your credit. We have a few credit cards that are notorious for doing that. And you have people who just have excellent credit, and then they have one late payment, and it's $25 to $50, and you know what it was. You know it was that annual fee that just kicked in, and they weren't ready for it. So, be careful. If it's a place and you always use your card and there's a value to it, maybe. But you don't want to have these cards opened up all over the place.
Yeah.
Go ahead, sorry.
If you feel like something's about to happen with one of your credit cards or one of your trade lines, or maybe you didn't pay attention to it, or it's about to go into a collection, please make that call. Don't let it go into that collection. Once it does, that $100 medical bill or whatever the bill it might be could hammer your credit score by 30, 40 points.
Yeah. Right now, the $25 payments, I had one that cost us the loan. It cost our borrowers a home, because they were late. It was a $25 payment, like you said, Mike, and they went on 30 days, went on 60 days, and then all of a sudden we pull credit. We were trying to actually, we ran an analyzer, and we figured we needed an increased credit score in order for them to be eligible for a bond. And it was so close for us to be able to approve them for a bond, and they would have had their home. But what ended up happening was that they missed that $25 fee, missed 30 days, missed 60 days. And then when we did the rescoring, instead of the rescore going up, which is what we expected, it was way under. And I'm talking like 70 something points, disqualified them from a bond, disqualified them from the loan. And, we had already done an appraisal on it. Inspection was already done. I mean, the file was already on its way, and we ended up just, losing a loan, but then losing a house, over, $25. Like, it was just, that one hurt. That one hurt to see.
Credit's a tough one. It's just always a tough one. So,
yeah.
All right. So, and let's actually, I want to pop back really quick and talk about this one here, because, and this is more for realtors, is, are there any credit incidents? But it comes back to, everybody will find their level of comfort with the customer. So sometimes, I use the acronym I.C.E, income, credit, equity, and you can sort of run through it. So if you're talking to somebody, they want to have a conversation with you. Most realtors aren't just going to say, oh, call my lender immediately before I finish the sentence. So you're generally going to have a little conversation with them. But I'd say don't always dig too heavily, but credit incidents, foreclosures, bankruptcies, short sales, deed in lieu, stuff like that. We can work around some of that stuff. If you're in a BK13, we can still get you a loan in the BK13 if you've been paying on it long enough. If you had a bankruptcy chapter 7, what is it? 2 years discharge, we can get you an FHA property. I might want to double check that one. But there's a lot of stuff we can do. So, don't necessarily think that it completely discounts the customer. And then also you have to figure out what level of comfort you have with how much you want to dig in with them. But I still say always make sure they're pre-approved. You don't want to be wasting your weekends. Your time is valuable. Everyone's time is valuable. And to be driving a customer around for weekends, showing them properties, and then after you've wasted that time, you've made an offer, or you're about to make an offer, you find out they just had a foreclosure, or they just filed for bankruptcy, or they just had one discharged. Find out those things now before you start, spending your time.
Yeah, that's why we asked you just reach out to us kind of first, no different than maybe buying a car. You certainly want to know what dealership to go to. You certainly want to know what you can afford and what your numbers are. Same thing here. No, before you start looking around at places, because when you find the right place you want to make an offer on, you want to be ready to make an offer.
Yeah. All right. Equity. That's the E part. I.C.E. Income, credit, and equity. Equity is, do you have a little bit of money for a down payment, closing costs, prepaids, and escrows? Do you have some money? So do you have it, and where is it? And if it's in a box or a shoebox someplace, get it in the bank. Get it someplace where we can start seeing it, where we can track it. We've got to look back 60 days and see that money. So if it's investment accounts, depending on the type of investment accounts, it may have to be cashed out. We may have to see it being cashed prior to closing. So if you've got a Fidelity account, if it's in your cash account or your Fidelity or your E-Trade or whatever, then you're fine. But if it's tied up in stocks or tied up in crypto, we'll need to be able to see that being transferred into an account prior to closing.
Yeah, and it's all a paper trail. So, I know that we have investment accounts that they go from investor to the bank and or from a savings account to a checking. I've had people that decided that they want to open up a savings account because that's where they want the money to be, and then all of a sudden the savings account is only like less than 30 days, old. So yes, we need to ask like where the money came from. So when you transfer so much within checking accounts, savings accounts, investment accounts, any type of account, we're going to continue to ask you where the money is coming from because we need a paper trail of where it came from. So just because you opened up a savings account doesn't mean it came from your savings account because the money didn't appear there magically. It came from somewhere. So we will be asking for paper trails. If it's, I know with investments, it may be a wire that comes in or a check that they send you. We have to show the check being deposited and cleared into your account, matching a statement from Fidelity or whoever you have for investments showing that it's the same amount that got deposited. So lots of paper trails. So just let us know where you have the funds first. And that way you're not just shuffling money around from one account to the other because we're just going to ask for more documentation. And I will say we also have an amazing system, account checks. When you do our application online, which by the way, our application is absolutely amazing, there is an option for you to use account checks, and then we're actually able to get this information for you from the bank. So you give us a certain access just to get this information, and it's so much easier for you just because you don't have to be providing us with a million different statements of where the funds came from. So if you get our application, highly recommend you sign up for that.
And we don't have access to your account. I really want to make that clear because it's something that we try to stress with our borrowers. This is a huge convenience for the borrower because you don't have to chase your bank statements and we'll get them. But I want to make it clear, we do not have access to your money. We're not asking you for any PIN codes and we have no intentions of taking any money out of your account. It's more of a benefit or a convenience to you. That's all.
Mm-hmm.
It allows the banks to share information with us. That's all it is. So it allows you give them permission to share information with us for a certain period of time.
Mm-hmm.
But it does. I mean, if your employer cooperates with our system, and your banks are part of the system, basically, if you're a W-2 income employee, we can really get away with just a copy of your driver's license and then be done. In general, we like to go ahead up front, just get the pay stub W-2, but the account check makes it very simple. But theoretically, if everybody gets a good match in there, a copy of your driver's license or passport is about all we're going to need for some of these types of jobs.
This service is in line with what the commercials you might see on TV. Less paperwork, or do it from your phone, or keep it simple, or things like that. This is the same process. We offer the same thing. You don't have to run to the bank, get all your bank statements. Just allow us to access it, and it'll make your life a lot easier.
And you get to pick which accounts too.
That's
So
right.
if you know that you have like your, your money for your house, and you have like 6 different accounts with 6 different banks, but it's only really coming from one account, as long as there's no transfers that we need to verify in between banks, that's all you allow us to have information from. So it's not like you're just opening your doors. Here's my 6 banks with my 6 different accounts. It's where the funds are coming from, that allows us to to peak, like Tom said, for a limited amount of time. It's not that we're having access, full access to your account.
Right. And Google account check. I mean, you Google it for yourself and see what it is. That's the company that offers the service. It's nothing that the three of us came up with while we were having drinks. So it's a legitimate service that works perfectly, and it really is a huge convenience.
Also, funds, gift funds. You have family that's willing to help you out, we can use gift funds. So we just watch the money. We verify that it's come from their account. They'll sign a gift letter prior to closing. They'll tell us what account it's coming from, and then we'll make sure that the wire comes from that account at closing. We tell people just to wire those funds in the day before. So if you have family that's willing to help you out, that's a great source of funds. And they sign a letter that says it is a gift, and they're not expecting repayment of those funds. If you're selling something, you can sell something if you can track it. If you're selling a boat or a trailer, if you have a registration, have a picture of it, have an invoice. Let us see that it's a legitimate sale of a piece of property, and then we track that money going into your account. So if you have legit or surprise us, you tell us if you have money that went into account from a legitimate source and we can track it back, we can generally use that money. But there is just nothing like cash, like a parent that hands you $5,000 and you just put that cash in your bank. Something like that can mess you up. Or if you save cash yourself, we have people that are in the service industry and they work on tips, and they might just keep cash in their house, and then they go deposit it, and that can be a difficult problem.
And the other thing is also, like, when you go to a bank and you make a deposit, let's say yes, you're depositing over $10,000 or 10,000 and a penny. When they do that report, the large currency transaction report, just know that they're not. If you're working, a tip type of job, and you're making these deposits, I promise you, the government's not after you. Just go make that large deposit if you need to. If you know you're going to buy a house in 2, 3, 4 months or whatever, because, like, again, we have to see it for like the last two statements. But when I was at the bank, like, yeah, we needed to know where it was coming from. But in reality, I think when I was at the bank, what we tried tracking and really tried to cut down on it was really money laundering. So unless you're laundering money, you don't have to worry about it. So, I do have people say, oh, I'm not going to go deposit 5. And here's the other thing. If you deposit 5,000 today and 6,000 tomorrow, you're still going to get a large currency transaction report. So you're not getting away with it just because you didn't do the 10,001 penny deposit. If you do it within 3 different days, within 5 different days, within 3 different branches, they all talk to each other. So we all know what the activity is. So I just coming from the banking side, I promise you, if you're just tip type of job, just make the deposit. You're not hiding anything. That's your job, and that's what you tell the bank teller. Like, this is tip money that I've gotten from my job. It's not you're not doing anything wrong. You just report it. It is what it is.
That $9,990 deposit is going to be a bigger flag than the $10,000.
Yeah. In the regular world, cash is king, and in the mortgage world, cash is a red flag.
Yeah, we definitely don't want to structure money. I promise. We still look at that a lot closer than any large transaction. And plus, I mean, if you're depositing like $15,000 each week, then yeah, they're going to go ahead and report it. But again, if we used to have a place that they used to sell like used vehicles and whatever, those are special places that get, you still have to file it. But again, it's, if you're doing something legitimate, it's nothing that you honestly have to worry about.
All right. So basically, we've covered the I, the C, and the E, ICE, which is the acronym that tells the whole story. But again, let us do the heavy lifting for you. We'll dig in. We'll do the pre-approval. You just know the basics. When you're talking to your customer, just be thinking I.C.E. And basically that covers the mortgages, income, credit, and equity. So reach out to us. And I love it when I just get a text, a name and a number. Sometimes I'll get a phrase about the customer, and then I give them a call. Sometimes I'll have a realtor that wants me to call them first and touch base, but more often than not, they're just, hey, check this customer out, give them a call, let's get them pre-approved. And that's the way to go. So go ahead. If you haven't already done it, go to our Facebook. It's Facebook Wellington Lake Worth. Like our page, follow it. Every Wednesday we are here. Every Wednesday night at 6:30, we do a Zoom class for home buyer class. Next Friday, actually, May 19th, not this Friday, but May 19th, we're going to do a class in our conference room, and it's going to be on maximizing your exposure on social media. And it's just a few tips that can make a big deal. And Tom and Elizabeth, you went to the class. It was Ryan McHugh with Trident Title. It was phenomenal. He's an excellent presenter. And you guys said that there were some great takeaways on that.
Yeah, he makes the class like so fun and so entertaining, but then you learn so much. And even though you think you might have like social media mastered, I promise you don't. You're gonna walk out of this class with something else you're doing, or if you're already doing it, I'm not saying you're doing it wrong, but maybe just a different idea of how to do certain things. I mean, it's just an awesome class. There's like sites that I didn't even think about putting business on, or like Pinterest. I would have never like been like, okay, let me go on Pinterest. I'm not going to give away what he says, but it's just ideas that he will give you that makes you kind of go, maybe I need to do something different. And you'll enjoy the class. So definitely sign up. Highly recommended.
Excellent. All right. Well, we appreciate everybody joining us, and we'll see you next week. And maybe we'll see you at one of our home buyer classes. Have a good one.
Bye.